I welcome you all to the call. Firstly, I would like to thank the management for taking out the time to address investor queries. From the senior management team of TTK Prestige, we have with us Mr. Jagannathan, who is the chairman, Mr. Chandru, the managing director, Mr. Shankaran, who is the director of corporate affairs, and Mr. Sundareshan, who is the CFO. With this, I would now like to hand over the call to the management for any opening remarks.
Thank you. You must have all by now seen the numbers. We've had a very good quarter, in spite of the fact that Kerala, we lost substantial sales in Kerala. And compared to last year there was a restocking after GST. In spite of that, we've grown nicely, 8%, and bottom line nearly 30%. In other words, we had a very good quarter, and we hope to have similar quarters in future. I wait for your questions now.
Sure, thank you very much. We will now begin the question and answer session. Anyone who wishes to ask questions may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have the first question from the line of Sameer Shah from Value Quest. Please go ahead.
Hi, sir. Congratulations on good set of numbers. So my first question is on employee cost. For first half of the year, employee cost has grown by about 22%. So what has led to sharp increase in this cost?
Okay, all our factories are running full throttle, and you would have seen that our production capacity utilization has gone up in this year. We've also taken additional manpower this year because we want to open up a few markets with a greater degree of depth outside of the south. And therefore, this is contributing to the additional manpower costs. These are basically investments and increased capacity utilization on our manufacturing.
Okay.
Which has led to our increased margin.
Okay. And when I look at your segmental growth, so growth in cookware was negative this quarter and appliances was in single digit, 8%. So how to read this?
So Kerala, the appliance growth, appliance sales largely come from Kerala.
Okay.
As you know, Kerala has shut down practically for nearly 25 days of the month. So that is why you've seen the cookware and appliance growth slow down.
Okay. Then a second one, small clarification. In the morning on the TV, you said you'll be able to maintain the margin in second half. So you were talking of Q2 margin or of H1 margins?
H1 margin.
H1 margins. Okay. And just lastly, in terms of export, it is only cooker sales or it comprises of other elements as well?
Cookers, cookware, mixies, a lot of things.
A lot of things. Okay. Thank you and all the best.
Thank you. The next question is from the line of Kunal Shah from IIFL. Please go ahead.
Hi, sir. This is Avi here from IIFL. Sir, I just had a small question on the demand side. Now, I'm just trying to read your commentary on the positive outlook. Given that the base essentially becomes a little favorable in the second half, how should I look at that statement? Is it on a 2-year CAGR basis you expect this momentum to continue, pick up, or you are still having some concerns? What should I read in from this commentary on being positive? Are you indicating towards a continued pickup?
Look, there are some segments of our business that are looking positive thanks to the rural thrust. The urban areas are not as positive as the rural areas. However, we are looking at, since we have so many new products, new channels and all that, we are looking at growing our top line significantly in the second half. Like you correctly pointed out, there was a base effect. The other thing is, after so many quarters, for the first time, we will have no major thing to worry about because this quarter, for example, had a GST restocking last year on YOY basis, so on and so forth. There's nothing there. We'll have to see one more quarter to look at the demand situation, but it's looking fairly all right.
And sir, could you kind of also give us a sense on the South India? I understand Kerala was impacted, but Tamil Nadu, etc., how are they been? Is the pickup that you had seen in the first quarter sustaining?
All other parts of the country have done as well, if not better than what we had planned for in the quarter 2.
Okay.
First half, every area is in double digit.
Okay. And sir, the second bit was on the margin commentary. Now, just trying to understand, is there any further price increases that you've taken to pass on cost inflation?
Well, the foreign exchange, the rupee depreciation that has recently happened, we have taken a price increase on our imported products. On the domestic products, there's no major implications, so that's going on as well.
Okay. So none of the inputs are dollar denominated or, aluminum, etc. Those that's what you're indicating, sir? Or
we had already taken up a price increase on our basic aluminum and stainless steel products because the cost of commodity had gone up.
Correct.
And that is looking downward, so we are all right now.
Okay. So essentially the demand front kind of is also very favorable as the margins as well are kind of not video kind of
yes.
about. Yes. Okay. I'll come back in the queue for any question. Thank you.
Thank you.
Thank you. The next question is from the line of Aditya Babu from Axis Capital. Please go ahead.
Thank you, sir, and congratulations on a good set of numbers. Sir, at the AGM last time, we talked about doubling our domestic turnover over the next 4-5 years.
Can you speak a little louder?
Speak a little louder.
Hi, sir. Am I audible?
Now, yes.
Great. So, at the AGM last time around, we talked about doubling our domestic turnover over the next 4-5 years. This essentially means a 15% plus kind of a growth rate. Can you elaborate a little on this as to which segments do we see growing with such kind of consistency? And in the same breath, if you could explain how the growth in the PSK network fits into this strategy.
Okay. You are absolutely right. It's around a 15% growth rate that we are looking at in the domestic market for the next 4-5 years. The way we are looking at this is there's been a significant trust by the government in the Ujjwala Yojana. That should open up at least 8 crore new kitchens for kitchen products. We're not looking at one specific product line that will help us achieve that growth rate, but we're looking at an all-round growth rate. Pressure cookers in particular, we're looking at gas stoves, mixer grinders, and small electrics to propel us with that growth rate. So that's on the growth front. What was the second question?
Sir,
in fact, our growth have achieved that 15% in the first half, if not for Kerala.
Right, sir. That's quite encouraging, sir. So my second question was this, how does the growth in our PSK network fit into this strategy? I mean, do we expect a significant contribution coming from our PSK network going forward as well?
Currently, our PSK network contributes to about 17% of the sales. Going forward, we are looking at keeping the same percentage contribution of the channel, which means that the PSKs will grow at the same rate of 15% as we go forward. We're looking at store acquisitions. We've just gone through a new rebranding exercise for the PSKs. They are now called PXL. They're called Prestige Exclusives now because we're no longer just in the kitchen. So we're looking at store acquisitions going around aggressively. We're looking at roughly doubling the number of stores in the next 4-5 years in the same period.
Right, sir. That's quite encouraging. Sir, my second question is on the CAPEX and the free cash flow. Our CAPEX plans, do they remain more or less stable at 90 to 100 crores for this year?
Yes.
And that is predominantly to increase our pressure cooker capacity?
And cookware.
Pressure cooker and cookware. Right, sir.
Yes.
Sir, in your press release, you talked about some 245 odd crores of free cash that you have. Have you narrowed down on any acquisition targets, or what is the plan for this excess 250 crores?
No, we have not narrowed down. We are looking at several opportunities. As and when we know something, we shall certainly publish it.
Great, sir. Thank you so much for your time, and congratulations once again.
Thank you.
Thank you.
Thank you. The next question is from Navin Trivedi from HDFC Securities. Please go ahead.
Yeah, good afternoon, everyone. And congratulations for a good strong numbers this quarter, considering the Kerala impact. So, in your press release, you mentioned that there is around 15 crore kind of impact in the due to Kerala. So if we see that number, and if we remove that impact, then I think our top line is growing by around 9.5 to 10% this quarter. But I don't understand the decline in the cookware despite the impact on the Kerala.
So Kerala is a major market for us, and you must remember that the Qtr2 is a major festival season in Kerala. So what was lost was really 40% of the year's sales. And Kerala is a very large cookware market for us.
Okay. So, but you mentioned around 15 crore kind of impact from Kerala in the press release.
Yes. And please remember, we also said to you that the previous year's numbers reflect a large restocking by the channel thanks to a post-GST scenario. So really this quarter was actually a big struggle because we were looking at a high base and a poor festival in Kerala.
Okay. So do you think that the large part of the restocking happened more towards cookware and appliances versus cooker, because cooker growth was still healthy at around 11.5% this quarter?
Yes, cookers have done extremely well because our rural thrust is doing very well for us in cookers.
Okay. And when you say that second half also you expect reasonably very strong growth, and when we look at the base in the which will be play out in the second half, there also it's very high because in third quarter we posted around 15% growth and fourth quarter was around 22% growth. So do you think that
last year's third quarter, the actual top line was lower than the second quarter?
Sure.
So we are expecting this year's third quarter to be a little more than the second quarter. So you can make your own assumption. And
again, like the festive season benefits will also be in the third quarter. So coming back to the festive season thing, how are you seeing that the expectation from the Diwali side? Because there are lots of feedbacks are coming that the festive seasons are slow. Some feedbacks are coming, festive seasons are good. So how are you seeing in your category and your field?
See, what we have seen in the last few years is that the Diwali retail is really based on the last 10 days preceding Diwali. Those last 10 days we haven't yet seen. We will know only in the next 2-3 days whether the Diwali retail is gone to its full swing. So, but we expect it to. Our primaries are in line and therefore we are expecting a good season.
Sure. And on the other expenses side, considering the growth which we have posted during the quarter, why the other expenses are flat? Is there any one-off in the last year, second quarter?
The accounting standards now require you to reduce the discount from the turnover. So some of the other expenses go to the top line. So the average is the bottom line seem not to have gone up.
Sure.
But that will also given a sales figure and a discount figure. Last year, that part of the discount figure was reflected in the other expenses. This year, it has been reduced from the sales directly. So that is the reason. This accounting treatment.
I'm saying last year, second quarter, this will also be the case because since second quarter onwards, the GST implementation was there. So the accounting thing will also be similar in second quarter last year?
No, the accounting standard.
See, GST was not the criterion. The criterion is AS 115, which mandates that certain items of expenses related to sales are to be deducted from revenue rather than showing it as expenses. That portion this year is present in discount, whereas last year it was in other expenses.
Okay.
So that's India 115 started only this year.
Therefore, the accounting entries are not comparable strictly.
So this quarter we posted 39 crore discounts, correct? Versus last year we reported 34 crore discount.
Yes.
So how should we see the numbers versus last year?
Yeah, that 5 crores is there. No, you have to put that 5 crores to the bottom. You will do the math.
No, I didn't understand, sir.
Yes, let's
see that the last year's 33 is not in reality 33.
Okay.
In equivalent terms, it is around 34.5 or 35.
Okay.
Because certain expenses which are to be classified today as a deduction from sales were classified as other expenses last year.
Okay. So you mean to say the revenue growth in real terms, underlying revenue growth will be higher than what we reported those quarters?
Yes, you are right.
Okay. Okay. Yeah. Thank you so much, and that's all from my side.
Thank you. Next question is from the line of Fachal Lohade from JM Financial. Please go ahead.
Yeah, thanks for the opportunity, sir. My first question, pardon me asking for this clarification. We had in the second quarter last year a 10.5 crores of GST driven or some compensation to the dealers and inventory adjustment pertaining to the GST transition. And that time you had indicated that it is actually part of the COGS or raw material cost. Just wanted to re-clarify because if I do the same math, what was told in second quarter last year, we seem to have seen a somewhat slight margin reduction at the gross profit level as well as EBITDA margin. So wanted to just get that clarification, sir.
Well, it's like this. You're absolutely right. Last year, the 10.5 crores was a one-time, which is not there in this year as a one-time.
Correct.
Okay,
At
but
how do you arrive at the
margin reduction?
Margin does not reduce in that.
Even then.
No, actually, if you adjust this 10.5 crores, as in increase the gross margin, because this 10.5 crores was taken as raw material cost.
Yes.
Take it as one-off.
No, 7 only.
Only 7 crores was taken there last year.
I'll explain it like this. It's quite difficult for me to get the numbers over phone. Conceptually, what has happened is last year, you had to look at 3 numbers. The discount on the direction from sale, and there is a raw material consumption, and there was another expenses. So the 10.5 crore was spread over 2 years last year. Now it is spread over 3 accounts, and discount as well as material cost as well as here. Therefore, it is difficult for you to compare this one. What we are trying to say is that forget all these arithmetic numbers. We have got a certain EBITDA margin achieved for the first half as a whole. Q1 plus Q2. Right. Our intention is maintain that it is closer to 14% going for the second half. That gives you a clarity on what is the kind of top line and the bottom line we are looking at.
Perfect. That's very helpful, sir.
The verification gets us nowhere, which is substantially more than last year.
Absolutely. I agree, sir. That's great. The other thing I wanted to check, you've highlighted that rural is doing better than urban somewhat. So is it possible to get what is the mix in terms of urban and rural? Just broad, I understand it may not be absolutely calculated, but just a broad mix in terms of rural, urban, and how do you see for next?
We know only one part of rural we know to exact. That is what we directly supply to the customers' rural area. What goes through our dealer network in the rural area, we don't know. And secondly, some of this data on rural, we want to keep it confidential till the market totally goes to a rural area because you're tapping areas which other brands are not tapping. So you'd like to keep quiet on that where and how it is coming from.
Got it. And just the last question with respect to the capacity expansion. What is the current capacity we have with respect to cookware? I know you will have various SKUs, just a broad number. And what is the expansion we are looking at? And is it only focused for the domestic sales or it is for the exports purpose?
Both capacity currently for cookware is 6 million, which will go up to 8.5 million.
Okay.
Cookware is currently 6 million also, which will go up to 8 million. And in cookware, a large portion of that expansion will be for export.
Large portion is for exports. Okay. And this alone, 2.5 million and 2 million for cookware respectively is costing us 250 crores. Is that understanding right, sir? Or is there appliances also there is increase in capacity?
The 250 crores is a mix of regular maintenance capex,
okay,
new building, and new machinery for new capacity. This is a broad number which we spread over 3 years. Okay. Immediate expansion plans have been just told to you by the chairman.
Right, okay.
That's needed, but it's largely in the area of pressure cookers and cookware, not in appliance.
Not in appliance, okay. And by when do we expect this 8.5 and 8 million capacity to come on stream?
By the first quarter of next year, the new capacity will kick in.
That is by June 2019?
No, by April to June. It will kick in April.
Yeah.
Okay. And how much would we spend by then? Roughly 70-80 crores for the current year, FY19?
About 90 crores.
90 crores. All
that
right.
includes the maintenance capex.
Understood. And just last question with respect to our new products, how are they doing? And with respect to the sub-brand which we have launched, how is it doing? And how do you see the cleaning equipments doing, let's say, over the next 3 years? What kind of revenue we can expect?
So the new products are all being received very well in all categories that we have launched. We're seeing particularly good response in inner lid cookers for stainless steel. We're seeing very good response for our new mixer grinders and our new gas stoves. The cleaning products are doing fairly well. We've added a lot of products, and our water purifiers are slowly but surely getting traction. And we are looking at further expanding our portfolio in water purifiers as well.
Understood. And just that, with respect to the mix, how much can we expect out of the cleaning equipment over the next 2-3 years?
We stand by what we told you, which is basically in the next 5 years, we're looking at cleaning contributing to between 250 and 300 crores.
Got it. Great, sir. Thank you so much for answering my questions patiently. Thank you so much.
Thank you. The next question is from the line of Shiva Kumar from Unifi Capital. Please go ahead.
Yeah, thanks for the opportunity and congrats for a good set of numbers, sir. Sir, my first question is on the appliances segment. Can you give the key products which saw good sales during the quarter and which led to this kind of robust sales growth in that segment?
Our gas stoves and mixies have done very well.
And also have the cookers.
Right. Sir, and, okay, gas stoves and mixes. What about the induction stoves, sir? That's part of...
They have also done very well.
Okay. Got it, sir. Sir, and what was the ad spend during the first half and what is the budget for this year, full year?
Yeah, ad spend is roughly 6.8% of our revenues.
Right. And it will remain the same, sir, for the full year?
Yeah, it's round about that, you know.
And what will be the split between sales in South and non-South market in, say, the first half of last year and the first half of this year?
50-50 remains.
The 50-50 scenario remains.
Okay. So given the emphasis, that we are placing on expanding our reach in the non-core, the non-South markets, how is that giving out, results? Are you seeing encouraging results over there?
Yes. Very.
Okay. Sir, and what is the current contribution from the online channel?
About 9%.
Okay. And during the recent sales by the e-com websites, we got to hear from the media releases that the sales increase was to the extent of 50% over last year. How was your own experience?
Similar.
Okay. So can we expect that sales experience to give a bump up in Q3, sir?
The online sales platforms have a sales calendar. Whenever they have a big event, it spikes, and then the others take over. So the calendar largely has been similar to last year. So we are expecting that whatever happened last year, those kind of spikes will happen and those growths will happen.
Right. Sir, and are you seeing any impact from the recent increase in electrification in the rural areas? Because typically the Ujjwala scheme led to an increase of sales of cookers from the rural areas. Do you expect the appliances segment to also get a bump up as and when electrification reaches the nook and corners of the country?
Yes, indeed. And we are also And we are also seeing that the government is also looking at promoting induction cooktops now that electrification has been achieved, and we are expecting something from the government on that side. And because after that, then it becomes cheaper for the government to actually reduce consumption of LPG now that electricity is being given.
Okay. Thank you, sir. And all the best.
Sorry? Thank you.
Thank you, sir.
Thank you. The next question is from the line of Kunal Sheth from B&K Securities. Please go ahead.
Yeah, hi, sir.
Hi.
Sir, during the call you mentioned that, the rural sales are growing faster than the urban sales. Can you give us some sense about what will be the share of rural sales as a percentage of our overall sales or maybe our distribution network?
I answered that question in detail about 5 minutes ago. We cannot measure rural sales directly because some of the sales that goes to our regular dealer network goes to rural areas. We only know what we sell directly to the rural customers. So I cannot give you an answer on that.
Okay. But sir, any sense on how much, what part of our distribution is in rural or tier 3, tier 2 cities?
That is the question I cannot answer. We would like to keep the way we track rural market, the consensus at this point in time.
Okay, sir. Thank you.
Thank you. Next question is from Nidhi Agarwal from Angel Broking. Please go ahead.
Yeah, thanks for taking my question. My first question is, what is the percentage of, how much of sales is coming from Kerala?
Kerala accounts for about 8 to 9% of the total company sales. Out of that, about 33% happens only in Onam, that is around August, September.
Okay. So, have we seen slowdown in any other part of country also? Or the sale have been, as per our expectation, had not any flood been there in Kerala?
Repeat the question, please.
So, barring Kerala, sales in other part of India are as per our expectation, or was it slow?
Yes. We planned for a 10% growth OYOY, taking it upon the various factors underlying both the quarters. If you add 15 crores, which you last in Kerala to the top line, you would have crossed 10%. That, I think, conveys the message.
Okay. And the COGS has actually, cost of goods sold has actually increased by about 1% this quarter. So what has led to this increase in raw material cost?
Product mix.
Yes.
Okay, so
also, the accounting standards have changed. So the top line has been reduced more than last year. So it appears that raw material cost is higher.
Okay.
But how did you get the cost going up? Where did you get that calculation?
So if I add a raw material consumed, stock adjustment and purchase of finished good together.
Okay. It's really not very different from the previous year, if you look at it.
Okay. So how much of imports are happening now? How much you are importing?
What percentage of the products we sell are imported? Is that the question?
Yeah.
Less than 15%.
Okay. And this 15% growth on yearly basis in revenue looks on track?
Sorry?
15% growth for the year looks on track for the year?
You are talking about growth or imported goods?
Revenue growth.
You are talking about revenue growth?
Yeah.
We would like not to give a specific guidance at this point in time.
I mentioned that we will grow in the double digits. Whether it will be 15 or 14 or 13 or 16 or 17, we wait and see.
Okay.
Our long-term goal is to grow at 15% a year.
Okay. Okay, sir. Thanks for taking my question.
Thank you. Next question is from the line of Sameer Shah from Value Quest. Please go ahead.
Hi. Trade receivable for the quarter has increased to 316 crore versus 242 crore in March 18 balance sheet. What has led to this sharp increase?
What is the question?
Trade receivable.
Yes.
So what has led to sharp increase in trade receivable for first half?
Oh, it is in fact, in percentage has come down.
In terms of number of days.
Our ratio on receivable is actually better this year at the end of September 30th as compared to September 30th of last year.
If I look at TTM sales and trade receivable as on date, it has increased by I think 10-12%. In percentage, in number terms, it is increased by 8 to 9 days.
My first half increase in sales is 12%.
Yeah.
And receivables are increased by more than 25%.
No.
See, it all depends on when the sale is happening. If you look at my debtors on turnover, and if you do a 12-month backward turnover, my ratio has actually only improved.
Okay.
And the sales is net, whereas the debtor is a gross, which includes GST.
Okay. Got it. And secondly, on Horwood performance, on a full year basis, what one should expect?
It will be like last year.
Like last year? Okay. Thank you. That's it from my side.
Thank you. Next question is from Abhijit Sinha from Pi Square Investment. Please go ahead.
Hi, sir. Good afternoon. Basically, I want to, as the previous analyst was saying, that in the balance sheet, if you see from September, we had a 242 crore trade receivables, whereas in the March of 2018, we had 316. No, sorry, the other way around, sir. From March, we had a 242 crore, whereas right now we have a 316 trade receivables. So that's...
They're not comparable. You must compare the September this year to September last year.
Okay, sir. So
because the sales happened because of Diwali and all that, it happened in the last month. Whereas March is a very, very slow month.
Perfect, sir. And one more thing is that the exports, we had aimed it to be around 5% of our revenue. Right now, it's about 2.5%. Do you think in the coming quarters we will be able to increase that?
What? Repeat question, please.
Our exports, we were expecting that to be about 5% of our revenue, right? Earlier. Yep. So currently in this quarter, it is about 2.5%.
That is correct.
So, sir, are we making any plans towards that?
We currently do not have the capacity. We are going at full capacity for domestic. We are adding capacity. As soon as the new capacity is released, we will have growth export.
Perfect, sir. And any idea on the number of SKUs we want next coming quarters?
About 20-odd SKUs will come out this quarter.
Okay. And, sir, one last question was
regarding to answer you on the receivables, just so that we are clear on that.
Sure.
The receivables as on 30/9/2017 were 312.92 crores. The receivables as on 30/9/2018, after 12% growth in revenues, is 307.95.
It's a lower.
Perfect.
Our business is seasonal, so you have to compare the point-to-point YOY number and not the March number.
Great, sir. Sure. And just about the Tattva water purifier, sir, how has that been growing, sir, right now?
Which business? Tattva.
The water
Tattva is doing well. It's slowly but surely getting traction, and we are getting good attention. The issue is that the gravity space is not a growing space. So actually, we are looking at growing a shrinking market, really. But we are meeting with good traction, and we are now taken seriously in that space.
And also another problem that I see is that a lot of companies are coming out with their own brands of water purifiers. So isn't the market getting quite competitive?
It was always competitive, but what you are mentioning is in the electric space. We are in the non-electric space.
Also, can you please tell me a market that is not competitive so that we can get into it?
And sir, with the rising LPG prices, does that impact our demand? Do you see anything that people would slow down a bit, from that aspect? No, right?
If people slow down cooking, then it will happen. And if people stop eating, it will happen for sure. What do you think?
No, talking about the rural side, sir.
No, actually what is happening is, while the LPG growth is also happening thanks to the number of new connections that are happening, there is a steady, clear growth in induction as well.
In the rural areas too, now with electrification.
Okay, sir. Thank you so much. That'll be the answer. Thank you.
Thank you. The next question is from the line of Devans Nigotia from Securities Investment Management. Please go ahead.
Hello. Hello.
Yes.
Yeah. Thanks for the opportunity. Sir, I wanted to ask that...
you have to talk into the phone, please. We can't hear you.
Yeah. Am I audible?
Yes, now you are.
Yeah. So I just wanted to know about our long-term growth of 15% over 5 years. So can you break this up in organic and inorganic growth opportunity? Or how we are looking into it?
Yes, we actually said we'll do 5,000 crores in 5 years, of which we expect the organic growth, including cleaning solutions, to be 4,000 crores, and 1,000 crores coming from acquisition. That's the breakup.
Okay, 1,000 crores. And can you elaborate on the current size of cleaning solutions? And
again, you have to talk into the phone, please.
Yeah, the current size of cleaning solution.
Cleaning solutions is at about an annualized turnover of about 35 crores.
And you gave a 250 crore to 300 projection for the next 5 years, right?
That will obviously grow faster than the other two verticals.
Okay. Thanks a lot. That is it. Thank you.
Thank you. The next question is from the line of Shiva Kumar from Unifi Capital. Please go ahead.
Yeah, sir. Thanks for the opportunity again. So you mentioned that you have taken price hikes in the quarter gone by. If you could please quantify how much was the hike taken?
The price increase was taken on account of increased commodity prices in the end of first quarter on our pressure cookers and cookware, and the quantum of price hike was about 4%.
Right. So at the present levels of, the commodity price and currency, has all the impact passed on, or do we have to take further increase in prices?
Everything is passed on. There is no further need to take a price increase.
Right. So secondly,
things are stable as they are now.
Sure. Secondly, on the utilization levels at our plants, given that we are at a higher levels of capacity utilizations and new capacities comes on stream in the first quarter next year, would there be an opportunity loss for us, given that the market trends are looking quite healthy, and in such a scenario, how are we going to look at the situation?
We are in a position to feed this year's demand without any problem.
And if you mean, are we taking any opportunity price increases? We do not do that. Our price increases are honest.
No, I was not referring to the price increases, more on the volume trends in the industry. Given that we are at higher levels of utilization, would our capacity would be sufficient to meet, the current year?
Yes. What we said is the current year financial year projection will meet the current capacity utilization. Going on next year, new capacity will come into place for us to further grow the market.
Sure, that's great. And if you could also please quantify, how much was the contribution from the Judge brand in the quarter gone by?
The Judge brand is still very small. Actually, the reason for that is very clear. The Judge brand is a tactical brand which we would like to use only where we feel that the business for Prestige cannot come at the Prestige price. So therefore, we are underplaying it and only utilizing it tactically.
Sure.
Sir, just one question on the unorganized segment of the industry. Are you seeing any decrease in their market share across cookers, cookware?
We have increased market share across all our key categories.
Okay, at the cost of the unorganized sector, sir?
At the cost of the?
Unorganized players?
At the cost of maybe unorganized and organized players.
Right, sir.
I suggest you subscribe to Francis Benoit You have the answers.
Okay, thank you so much.
Thank you. Before we take the next question, a reminder to our participants that you may press star and 1 to join the question queue. The next question is from the line of Nikhil Shah from Motilal Oswal Securities. Please go ahead.
Yeah, thanks for the opportunity. A couple of questions. First, on the home cleaning solution part of the business, obviously your presser does mention that the performance has been encouraging. Would it be possible to share, has the products reached across India, or are you still halfway through that journey, and has the SKU profile also got completely ramped up?
No, we haven't yet gone across the country. There is still some distance to go there. We are slowly but surely building in terms of distribution.
So is there some challenge in terms of sourcing of the product, or?
No problem, Nikhil. No problem with sourcing.
No problem with sourcing. Okay. The second question was, just if I have to look at very basic question, if you look at the cookware to cooker ratio that we sell, right? So if you look at the second quarter, about 206 crore and 95 crore worth of cookware. So broadly about 50% of cookers is cookware sales. But globally that's not the case. So, why is it that, in India, only company that sells cookware in this kind of proportion in organized space is you, but, shouldn't it be the other way around? And so what are we lacking here?
Well, I tell you what we are lacking, and you know this, Nikhil. We've been in pressure cookers for the last 58 years. We've been in cookware for 10 years. We're building capacity. Also remember, the cookware market, you're right, is many number times more than the cooker market. But cookware is made in the village. The mud pots, aluminium utensils made in the village, cookware is made everywhere.
Right.
We are in the non-stick cookware business. That is not that big.
Okay, sure. And one final question is on the appliances part of the business. While we do see a reported number of 270 crores, there will be multiple appliances within, or multiple categories within appliances. Is there a case for manufacturing of certain appliances in India and reduce your import component, or it's too tough because of the change in design features all the time within the appliance category?
There is not only a case for it, we are doing it. In fact, we have indigenized nearly all of our induction cooktops. We are in the process of indigenizing rice cooker, and there is a process going on. We want to be the first in Make in India.
Sure, got it.
I don't know whether you've noticed, all our new products contain a logo which is made with pride in India.
Okay, got it. Perfect, sir. Thank you so much and best of luck.
You're welcome.
Thank you very much. That was the last question in queue. As there are no further questions, I'd like to hand the conference back to the management for closing comments.
Well, thank you everybody for coming to the conference. I think we must say that we've had a very good quarter. We are very optimistic about the second half as we have done in the first half of this year. So looking forward to hopefully present similar kind of results going forward. Thank you once again.